With massive layoffs in nearly every sector, weakness in manufacturing, car sales, and housing, and the biggest one-month decline in the trade deficit since the financial crisis, the economic picture is not looking good. Bottom line, now is the time to own gold, which is why the experts at Stansberry Research just stepped forward with a major gold prediction, arguing gold could soar as high as $3,000 by the end of the year, possibly even higher. You can find out why and get instant access to their #1 gold investment today. It's not bullion, an ETF, or a mining stock, but in the past, this gold strategy could have made you nearly 50x your money. Considering how quickly the price of gold has been moving in recent weeks, you don't want to waste any time missing out on the gains these experts believe are in store for this gold stock. To get a copy of his new free report with all the details, simply go to goldmaniareport.com. Again, that's goldmaniareport.com for a free copy of his new report. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here on Stansberry Research. Well, we are talking the Fed today, and this upcoming June meeting seems to be one of the trickiest the central bank will be confronted with in its 15-month battle to try and tame inflation. So will they take a pause? Will they continue with rate hikes? We're talking this and how it relates back to the gold market with Mark Yaxley, Managing Director over at Strategic Wealth Preservation. Mark, always good to be with you. Welcome back to the show.
Thanks for having me back, Daniela.
Well, based on current gold prices, Mark, I would say the gold market hasn't ruled out another, even though there might be a pause at this meeting, it hasn't ruled out another interest rate hike. Am I wrong in my assumption there?
I think the feeling on the street right now for gold and silver investors, Daniela, is that they're waiting for a clear indication of what's going to happen next. And that's been reflected in the spot price lately because there hasn't been, a clear sign that rate hikes are going to continue or there is going to be a pause. Investors are kind of just waiting for that news to break, and we've slowly seen the spot price of gold and silver come down as a result because there's just a lack of new buyers in the market right now, and those investors who are waiting to make their next purchase want to see a clear direction for the price of gold or silver, and that ties into the next Fed rate decision. My feeling is they're either going to pause or raise by another quarter point. And I think if they do raise by a quarter point, that will be positive for gold and silver, as we've seen over the last 6 months as they've gone through this rate hike cycle.
You would say positive, but how come? Usually with rate hikes in the past, that hasn't bode well for metal prices, Mark.
In this case, though, Daniela, if you look at the behavior of the Fed, since they began their cycle of raising rates, it has actually been fairly positive for the price of gold and silver. So I would tend to agree with you. Historically, as they raised rates, you saw, the price of gold or silver come down. But in this case, we saw a bull run that started really in November of 2022 and continued all the way through May. And this is a period of time where the Fed was still, pushing rates higher. So my expectation is, it's either going to be a pause or a small rate hike. And once we have that clear indication, gold and silver investors will be more comfortable and will start to make purchases again on a more regular basis than we've seen recently.
So I want to get back to that point. I want to talk about what you're seeing in the physical market there. But just to focus on the latest news today, gold getting a bounce today off of the negative news we saw coming out of the U.S. and supply management data. But, up until this Fed meeting, is this what it's going to be, just this push-pull around the $2,000 mark, and basically gold just reacting to whatever data is coming out on the day?
I think so. It's a pretty thinly traded market right now, Daniela. There's nothing overly exciting happening in the gold and silver market, and that's not necessarily bad news. As I said earlier, we had a really, really strong run starting back in November. Very exciting times for gold and silver investors. We almost hit new highs in April and in May, but eventually any market runs out of steam. It runs out of new investors coming in, and people are very hesitant to be buying gold and silver, as they should be, well, especially gold, near record highs. As you approach record highs and you've got persistent high pricing, wise investors are going to kind of step away from that and take a brief pause. And that's basically what's been happening. We saw a lot of that in May. The number of new accounts, not only at SWP, but also with other dealers within this industry dropped off. And with that came a lack of trading volume. We did see some people selling off, taking advantage of prices closer to 2,000 to sell off some metals and take a profit. So my expectation is, again, until we have some significant news, and especially now that we've got the debt ceiling issue behind us, until we have some more significant news, we're probably going to see gold and silver continue to consolidate. Gold could, trade as low as 1,900, 1,925, silver $21, $22. But the good news is that's a really great buying opportunity. They always say buy the dips. This is officially a dip for gold and silver, so you should be thinking about buying at these prices.
Well, because, like to that point, I have experts coming on saying, okay, you're waiting to see what the Fed's going to happen, but with most forecasts for gold being around 2,300, 2,500 for year end, to your point, aren't you better off getting in now?
Well, exactly. If you believe that the gold price is going to end the year somewhere between 23 to 2,500, then this is definitely an opportunity to be buying, because you'd be looking at a return of 15, 20% at those prices. So, if that's your belief, absolutely. I think 23 to 2,500 is a tad aggressive personally. I think we're more likely to see it trading between 1,900 to 2,100. That would be my more conservative call on gold for the rest of the year. But again, thinking longer term and thinking where gold is going to be headed over the next decade, because it's a mid to long term investment, then 1,900, 1,950 is a good time to be adding.
Well, who's not on the sidelines? Central banks. Want to talk about central bank buying with you, and this latest survey from the World Gold Council that says following a historical high level of central bank gold buying, gold continues to be viewed favorably by central banks. Their 2023 survey revealed that 24% of central banks intend to increase their holding reserves in the next 12 months. Now, I want to add, we did see Turkey sell gold, mostly due to political reasons and whatnot, but central banks continue to buy gold. Any insights you can add here and what you're hearing and seeing, Mark?
Right. So we talked about this before, Daniela, on the show. Is you got the three segments: the retail buyers, the physical buyers, the ETFs, and then you have the central banks. And the central banks, to their credit, have probably been the most consistent bullish segment of the precious metal space, for the last 3 or 4 years, really since the outbreak of COVID. And you've said it before, and I love it when you say this because you're so right, is they must know something. They're doing this for a reason. And the statistics that came out from the World Gold Council, saying that 24% of them intend to increase their gold holdings. And there was another interesting statistic from that same survey saying that 62% would consider adding a greater portion of gold to their total reserves moving forward, which is a dramatic increase. It was 46% last year. Now 62% of central banks looking to add gold to their reserve position. So the trend will continue. And that means that you have a solid base of demand for physical gold, which will help drive up the price. So if the retail investors get the next, big headline or the black swan event that helps push us towards or closer to new record highs, the ETFs will follow, because that's really representative of the Wall Street investors and Main Street investors as well. Then we should, comfortably be closer to that $2,100 gold mark by the end of the year.
And I just want to add, it's not just the World Gold Council saying it, because a recent report from banking giant UBS forecasted that central banks would accumulate 700 metric tons of gold worth, close to 45 billion this year alone. So, many would say, well, it's just World Gold Council talking their book, but no, it's more than one source, showing and indicating proof that central banks keep accumulating gold. On the retail side, Mark, what are you hearing? What are you seeing? I have noted that premiums on silver products, if I'm looking at US Eagles, have come down quite noticeably. What's going on here?
Yeah, as I mentioned earlier, Daniela, we have seen a lack of purchasing volume. We saw a lot of it during the month of May. It kind of fell off. It was quite noticeable. I'd say about a 40% decline from April's numbers. And what I realized, it's taken me 17 years to figure this out, of course, but what I realized is that wholesale premiums tend to provide a great indication actually prior to the spot price moving down. So before we saw the spot price for silver start to move down from $27 today, trading around $23.50, I actually started to notice that the wholesale premiums, notably on Silver Eagles, which is always a great indicator and a popular product, start to trend down, on a daily basis. They'd come down 10 cents, 25 cents. And that trend has continued even as late as last Friday. And those premiums have come down about 15% thus far. So really a nice little indicator that the demand for physical metals in the US market especially has softened. And that's now reflected in the spot price as well. But there are still some great deals out there to be had. We talk often about kilo gold bars, 10-ounce silver bars, 100-ounce silver bars. Seen a lot of retail investors pick those up at these still relatively high prices.
So how about premiums on gold products? Have they also come down? Because I was going to say, for those people maybe on the sidelines waiting to see what the Fed could do, but if premiums are lower, well, maybe now's the time to really take advantage before they go back up again.
Well, that's a really good point, because if you're price watching, if you're watching the spot price and you're worried, about a $5 or $10 move in the gold price,
right?
And yet the premiums are coming down, by $5 or $10
Exactly.
as the premium soften, then it's a wash, and you shouldn't really be, we've talked about this before, you shouldn't be price watching in the first place. Gold is a long-term investment. The prices, the day-to-day trading is not so relevant. But yes, we have seen premiums on gold products. Gold maple leafs, for example, have come down, I think, about $10 or $15 since the last time you and I spoke about it. So we are seeing some softening there as well. And again, that's a really nice little tip that you're throwing out to your viewers is you can watch the premiums maybe more closely than you should be watching the spot price.
The other thing I find interesting, Mark, is, speaking today, this Monday, the price action we're seeing in platinum. Do you have any insights? That's, up $25 today, palladium, rhodium, other metals in the PGM sector under pressure, but platinum doing well here.
Yeah, platinum's been, a pleasant surprise. A lot of people don't pay attention to the platinum group metals. Platinum has not had a great run over the last 5 or 8 years. It's been disappointing. But if you have been watching the platinum market, you've noticed that it's had positive returns. I think it was up 5% during May, if I'm not mistaken, or over the last 2 months. And then more recently, it's been climbing again. We've seen some significant purchases of platinum come through SWP as of late as well. So there is a little bit, maybe a built up demand there. And, fundamentally speaking, I can't say that the case for platinum and palladium is particularly strong at the moment. It is heavily dependent on the the demand for automobiles and therefore the number of catalytic converters that are being produced and installed in automobiles. But we have seen recent demand, so maybe there's something there. And the premiums on platinum products tend to be reasonable, especially if you're looking at platinum bars. So if you don't have any in your portfolio, I've always said it's worth having 5% of your overall precious metals portfolio allocated to those platinum group metals.
Fantastic. Really good insights, Mark, as always. I always love asking you, is there one product you really see flying off the shelf these days, or one that you would be eyeing or getting? Any insights there?
Well, I'm a big proponent of kilo gold bars, Daniela. if you can afford them, it is probably the best buy in the market. I think they're, the premium on that is about anywhere between 2 to 3% over the spot price right now, which is very, very good. But if you're looking for something a little bit more affordable, you've seen a lot of 1-ounce gold bars go right now. And again, that's good value. If you follow those golden rules that we've talked about in the past, that's probably, for the smaller purchases, 1-ounce gold bars are probably the way to go.
Mark Yaxley, Managing Director over at Bullion Dealer and Storage Provider Strategic Wealth Preservation. Thank you so much for these insights today. Come back soon.
Always my pleasure, Daniela.
And thank you for watching. We'll have more great content coming your way. Happy Monday. Be sure to stay tuned to the Daniela Camboni Show and sign up at danielacamboni.com. That's it for me. We'll see you soon.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.